Do you know that our financial status is determined by our behavior? Yes. Psychology of money states that only 20% of our financial status is determined by our knowledge or IQ, whereas balance 80% of our financial status is determined by our behavior. Unbelievable, right? But that is the truth. Want to know the impact of money and behavior? Want to know the relation between both? Then let's go into the video to understand the psychology of money. In this video, we are going to see what is psychology of money and how the money and behavior are interrelated. Well, first let us see what is psychology of money. Psychology of money explains that one's behavior determines one's financial status, and vice versa, one's wealth and financial status determines one's behavior pattern. Now, let us see how our behavior affects our financial status. Following are the proven behavior which determines our financial status. The first behavior is optimistic approach and perception. People who are brought up in lower income group feels that money is the reason for all the problems in the world. Hence, they have negative attitude and approach on money. Thus, they are very emotional, sensitive and are prone to losses and debt. Thus, they restrict their investment. Whereas, people who are brought up in a wealthy environment believe that money has a power to do anything, and thus they build confidence and they are emotionally stable to meet losses and debt. Thus, they invest more. The next behavior is decision making. Making right decision according to timeline and economic condition decides one's wealthiness. For instance, economic conditions vary in each period or timeline. Hence, decisions on investment strategy should be in line with existing economic conditions. For example, in earlier days, investing in gold and real estate were the main investment strategies. Then came the fixed deposit schemes, bonds, etc. Then came the stock market, cryptocurrencies, etc. Hence, deciding the investment strategy according to the timeline decides one's wealthiness. The third behavior is delaying the gratifications. Studies reveals that calm, patient and controlled behavior determines one's wealthiness. Self-control on spending for unwanted need and investing the excess and patiently waiting for the bigger return in future and thus delaying the gratification determines one's wealthiness. This is the main criteria which determines one's financial status. All wealthy people seem to possess this behavior of delaying the gratifications. Well, so far we have seen how behavior affects our financial status. Now, let us see the vice versa, how the money impacts our behavior. The first impact is in our self-confidence and risk-taking capacity. As one's financial status improves, one's self-confidence and risk-taking capacity increases. Secondly, it impacts our visionary thinking and planning. As one's financial status enhances, people start thinking on long-term plans beyond generations. The third impact is on alertness and vigilance. As one's financial status improves, people become alert and vigilant in all endeavors they do. Thus, To conclude, we can say it's our behavior which determines our financial status, and in turn, our financial status impacts our behavior. Hope you got a better understanding of psychology of money. Well, we can thus conclude that our behaviors like our approach, our perception, our decision making, our gratification which decides our financial status, and vice versa. Our financial status in turn decides our behavior like confident level, our visionary thinking, our alertness, etc. Thus, we can conclude that money and behavior are interrelated, mutually interdependent. Hope you enjoyed this video. If you like, please do share and subscribe. This is Devi Nyanashekhar signing off. Thank you. Thanks for watching.